Hi, welcome back to the channel. My name is Belin, and in this video we are going to be talking about the advantages of investing in shares. So if you have been sitting on the fence as to whether you should take up investment in shares or not, then you are in the right place, because I'm going to be taking you through reasons why you need to consider taking up investment in shares. My name is Belin. If you haven't subscribed, please press the subscribe button. For those who have already subscribed, thank you so much. I see the family is growing pretty fast. Now, for the benefit of those who are here for the first time, shares is a portion of the company's a company's ownership. So why would you want to invest in shares? What are the advantages? Investing in shares can earn you passive income. Passive income by way of dividends. I told you dividends are the profit share that the company shares with you, with the investors or with the shareholders. So if you are a shareholder of a company, especially if you're holding good dividend stocks, you can potentially earn regular income from the shares or from the dividends of that company. Whenever that company declares dividends, you know certainly that you are going to earn income, right? Shares also appreciate in value. The selling prices, the share prices increases, and that increase in share price is a capital gain. And I have discussed this capital gain in the previous video. If you haven't watched it, I will encourage you to please have a look at it. Now, what are the other advantages of investing in shares other than dividends and capital gains? Shares protect you from inflation. They potentially protect you from inflation, especially if you have the growth stocks. The growth stocks are the stocks that you know that potentially increase in share prices over time. So shares, unlike other investment options like bonds, which does not protect you from inflation unless you reinvest your coupons, the shares will protect you from inflation. Another reason why you need to consider taking up investment in shares is because there's very minimal capital required. Like in NSE, Nairobi Stock Exchange, locally in Kenya, you only need to buy a minimum of 100 shares. So the amount you need to invest in that shares, the amount, your starting capital can be as little as 300 shillings, right? Even if you are to take up investment in the average stocks, KCB shares is about 40 shillings, yeah? 30 something, but let's cap it at 40 shillings. And you know that for you to start investing, you need at least to buy 100 shares. So the minimum capital you need to take up KCB shares will be 4,000 shillings, and you'll become an owner of KCB, a part owner of KCB, right? So the starting capital is less, unlike investing in tertiary bonds, where you need at least 50,000 shillings for you to get started. So if you don't have that, you can get started with shares because you need a minimal amount. In fact, it could be a good place for you to accumulate your investment or your wealth, right? For as long as you know when and how to exit the market at the right time, such that you don't make capital losses. Now, shares are also highly liquid. For as long as you sell you sell your stocks or your shares at the prevailing market prices, you'll always get a buyer. So shares have a lot of liquidity. Investing in shares also allows you to mitigate your risk. Why? Because you can diversify your investment. You can be in the agricultural sector, you can be in the manufacturing sector, you can be in the banking sector, insurance sector, telecommunication sector, energy sector. It allows you, even real estate, it allows you to diversify your risk. And as we were discussing the strategies, the investment strategies, I told you that portfolio diversification rather, is one of the strategies that you need to employ. So shares allows you to diversify your portfolio, your investments or your assets into different industries or into different economic sectors. It also allows you to diversify into different economies. You can have shares locally and you can also have shares across the border. So investment in shares, that diversification will protect you from industrial risks or from potential risks that could affect a specific industry. For instance, if you held a portfolio in the agricultural sector, we have drought, and you held a portfolio in the agricultural sector, and that drought affects the production of tea, those companies will potentially make losses, or their profits will reduce. They will experience a decline in their profits. And so their performance will come down, so their share prices will also potentially come down. So if you only had a portfolio of stocks in that sector, agricultural sector, then the value of your assets of your wealth will decline. However, if you diversified to different sectors, also you have the banking industry, you have the manufacturing and other sectors, yeah, then that decline in the agricultural sector will not affect your wealth value as much as if you had it in different economic sectors. So shares have the advantage of diversification. Remember, bonds, you only invest in the government. So if the government defaults, then you are affected potentially. I'm not saying the government is going to default, but I'm trying to explain to you the advantages of shares, being that you can diversify your portfolio, right? So these are some of the advantages of investing in shares. It's an easy process. You can do it on your phone. In the next video, I'll be taking you through the disadvantages of investing in shares and how to mitigate those, or how to go about those disadvantages, all right, to maximize your return on your investments. Please press the subscribe button if you haven't, and see you on the next video, where we'll be discussing disadvantages of investing in shares.